Why did the banks fail and what it means for your house? Hey everybody, welcome to the Real Estate Minute Show. There's a lot of reasons why the bank failures all happened last week and a part of the week before, but the whole Silicon Valley Bank and Signature Bank and all this kind of stuff, it's a very complicated issue. The whole world is this global economy now. And again, like I said on the show last week, I'm just dumb. But there's one thing I do understand, and that is that it's an incredibly fragile system, obviously, right? The government tries to shore it up. They pay everybody back, and that's all great. And I think that the government will be there. Unfortunately, I think some banks need to fail. I think there needs to be some pain associated with that, unfortunately. Hopefully not by the depositors and people, but that's just kind of what happens in the banking industry. If we are continually bailing them out, they're going to do things that originally caused the problem. But the government is partially to blame. And there's one little thing I just wanted to talk about, and you probably heard it on the news, but my take on this is you have a Silicon Valley Bank, which essentially started this whole wagon train, and it's filled with Silicon Valley companies and hedge funds and venture capital and the money that was invested into these small, medium, large tech companies up there. I know a bunch of people that do business up there, and they were turned away business, turned away loans. They didn't want their deposits for years and years because they weren't part of that sector, even though there were strong other companies. There was one architectural firm that I know the guys over there, they tried to. Another restaurant chain who had 6 restaurants, they wouldn't take his business. So they were very, very niche. One big problem, niche, okay, issue. 2, the economy started suffering, right? So venture capital stopped flowing into the banks as much as it did before because the tech was laying people off. They laid off, how many tens of thousands of people in December last year. And so that caused the venture capital firms to go, whoa, let's just hold back. Tech is just kind of rocky right now. We're not going to dump billions of dollars of money into these companies. So the deposits kind of stopped into that bank and other banks, specifically that one because of their niche business. Is it niche or niche? I never knew. But that's what became the problem for that bank initially, is they stopped having all those deposits. And then the funds that were there started depleting as these companies were burning up this money. They call it the burn rate. And then the big boom happened, which essentially is caused by inflation. So this bank goes out, and banks have to keep a certain ratio of deposits to loans and all kinds of different ratios for the banks to be in love with them or not to violate banking rules. In order to do so, they have to hold certain investments. So they took a whole bunch of cash and they bought a whole bunch of bonds with it. And they were really, really cheap. They were only paying like 1 to 2%. But they were still getting some interest off of that as the bank was investing those depositors' funds in there to keep these ratios right. Well, what happens when the rates on those bonds go up? So now I can go in the market because of inflation and interest rates. Remember, your passbook account in your bank, like your Wells Fargo account, was paying 0 almost, is now paying 2. So those rates went up and bond rates went up. So I'm a guy, Jay, the realtor. I go in and I want to buy a government bond. They're going to pay me 4% now for a government bond. I'm going to get 4% for investing in that bond. The bank bought it at 1. So the bank is underwater 3% on those bonds. Well, they have to raise cash now because remember I said all those deposits are not coming in and they're actually being depleted. And so they need to raise funds. So they start selling these bonds at a loss. Nobody wants a bond that's paying 1% if I can go in, spend the same money and get 4% today. So they had to sell those at a massive, massive loss. And then they went out and said, we need to raise billions of dollars. And when they say that and you have your money in the bank, what do? You head for the front door. Give me my goddamn money back. I want it right now. And that's what caused that collapse. So that's kind of what initially happened. Now what happens now is the government, are they going to raise interest rates this week, next week? Are they going to hold back a little bit? Are they going to push it a little farther? Because now they have inflation, which is not stopping. And they have problems with banking issues because this is what happens with inflation. When you raise the rates, it makes it way more expensive for people to participate in the economy, even banks. And it's going to affect mortgage rates because people get scared. Banks stop lending so much on mortgages. They start lending higher rates to make it better for them because they don't want to take risk of lower rates, get stuck like the other bank did with the 1%. It's a mess. So just be very, very careful. Not where you're putting your money. That's up to you and your financial advisor and your spouse. I'm talking about be careful about buying and selling a home right now. Talk to people like me. Talk to somebody in your area, in your community that understands these issues along with just selling a house, not just putting a sign up and all the marketing I'm going to do, and this is what I'm going to get you. Ask them questions about this that we've talked about for the last 5 minutes. All right, good luck. Everything's going to be great, by the way. This is just a warning so you can ask the right questions. Take care. Thanks for tuning in, and we'll see you next week on the show.